BFM 89.9, the business station.
Good morning, Jameel. The Malaysian inflation numbers have just come out. What is the driving factors of the recent inflation rate for Malaysia?
Well, basically, there's a lot of headline attention at this news because this is the highest inflation rate data since March 2014. And basically, I personally believe there is a very strong correlation between the dramatic decline in the currency rate, by this I mean the weaker Malaysian currency, providing a heavy weight to businesses and consumers who are now facing heavy import prices. And this basic jump in prices has led to a very strong inflation reading.
Do you think the ringgit will see some support this year to actually manage the inflation rate as well?
Now, this is an interesting question. Personally, I think that the aggressive period of selling and the Malaysian currency has come under a real whirlwind of pressure over the past 18 months. I think this phase has ended. However, what's really significant to continue to monitor is the sentiment towards the commodity markets. And by this, I definitely mean the price of oil. So what I'm monitoring is WTI Oil teasing a move above $35. If it manages to break above $35, this would provide momentum for further support when it comes to Malaysian ringgit.
Petronas are reporting their earnings, and it's not that favourable. In fact, their revenue actually fell more than half. Do you think this spells bad news for the oil and gas sector in general, for not just in Malaysia, but for the region as well?
I think that any commodity exporter right now, and specifically exporters of the oil markets and the price of oil, they're going to be facing pressure. And this goes for any commodity exporter. It's the same for any business that is involved in this industry. So yes, of course, when the price of oil has declined by, well, at its peak, 80% in June 2014 to as low as $26 earlier last month, of course, there's going to be price pressures. There's going to be consequences to this.
Shifting our focus to the consumer purchasing sentiments, do you think consumer purchasing will come under play under current circumstances?
I think that one of the major factors you need to look out for, and this is basically for consumers on the ground, is that if you do have a weaker currency, and specifically to the levels of what the Malaysian currency has weakened over the past 18 months, you are going to notice less consumer purchasing power. By this, I mean products are definitely going to become more expensive to purchase from abroad. You're going to maybe notice you're going to have a higher cost of living, less disposable income is a possibility, but mainly it is consumer purchasing power is going to be weaker, which then means that Malaysian GDP output could face pressure as well.
Coming in from the Fed on the fact that they might not raise any more rates this year, Bank Negara might be able to slash some of the rates going forward in the second half of this year. Do you think borrowing costs will go up?
I personally, and I don't want to get into too much trouble, but I think that it's more likely that the Bank Negara will increase interest rates than decrease them. I know you're laughing because I might get myself in some sort of headline again. Okay, basically, no. If the weaker currency is such a heavy weight to economic pressure, if the strategy from Bank Negara is to maybe encourage more capital inflows in towards Malaysia, and if inflation continues to peak higher, and this does have an impact on the cost of living potentially, then there is the option to raise interest rates. If borrowing costs are higher at a time where 90% of other central banks are slashing and cutting them, this is more encouraging to external capital investors, more capital inflow towards an emerging market economy at this point can have the potential to increase the sentiment towards local currency.
Okay, do you think foreign investors then would view this event favourably going forward?
Yes, I mean, the hypothetical situation is that if you have higher borrowing cost, this is more encouragement to place your capital into the funds of that bank. So any increase in interest rates, wherever this is going to be encouraging for external capital investors. I think neighboring country, Indonesia, has just cut interest rates twice. Now, I'm going to be monitoring to see whether this leads to some sort of potential capital outflow, whereas other economies could be looking at a possible opportunity. But I would say that Malaysian GDP and GDP growth, although it is slipping slightly lower, the data still looks robust and be favourable as well.
Thank you very much. That was Jameel Ahmad. He is the Chief Market Analyst at international foreign exchange brokerage firm ForexTime.